In global markets, traders are betting on a large interest rate cut from the Federal Reserve, with markets now split on whether the Fed will opt for a half-point reduction this week. This shift in expectations has driven the yield on two-year U.S. Treasuries to 3.55%, its lowest level in 2 years, and weakened the dollar against the major currencies. Investors remain divided on how much policy support the U.S. economy requires, particularly as August retail sales data set to be released on Tuesday could sway the Fed's final decision. Analysts are also keenly watching how much the Fed will reduce rates as it kicks off its easing cycle. Meanwhile, across the Atlantic, European equities are facing growing pressure. The engines behind the region's stock gains over the past 2 years, including luxury and automotive sectors led by companies like LVMH and Novo Nordisk, are losing steam as trade tensions with China grow and concerns about slowing growth intensify. Investors are becoming increasingly weary. With Europe's stock market heavily tied to cyclicals and sensitive to economic shifts, the lack of a clear sector to lead the next rally has left the region's equities looking exposed. Sectors such as healthcare and consumer staples, while more defensive, lack the growth momentum needed to sustain robust market performance. Analysts are pointing to rising dividends in banks and utilities as potential bright spots, but these shifts come as Europe navigates both slowing demand and China-related risks. The market is left wondering if Europe's equities can find new leadership as global growth concerns continue to mount. And as regards market performance, let's now go domestic as we take a look at the weekly reports ended Friday, September 13 on the NGX. And there we have it, 97,456.62 according to what we have tracked, looking at the all-share index. Okay, and we look at the market cap now. And there we have it, 56, of course, 0.002 trillion naira. That's according to what we have also seen, with a percentage differential of 1.10%. Looking good, looking at the markets according to the performance as we tracked for last week. Let's now look at the top gainers now. Caverton tops the chart, closing at 2 naira 54 kobo, RT Briscoe 3 naira 65 kobo, UPDC 1 naira 78 kobo. Looking all greens in the double digits, looking good for the stocks, and the investors have actually put their monies on this. We now look at the top losers now. All right, looking at the top losers, well, of course, we don't have that for now. But then let's talk about the currency now. Beginning with the naira, it closed at 1,639 naira 55 kobo against the dollar. And there you can have it. So you can see it on the screen, and you can also see other major African currencies as they performed against the dollar, according to what we have been able to track. But up next, we will be picking the pulse of the day with, of course, Uade Ahimie, Head Strategy and Public Affairs. I'd like you to stay tuned. Once we're able to connect with him, definitely we will be able to talk more. Okay, so according to what I understand, Uade Ahimie is right here with me. Now, we will be looking at the issue around, of course, Nigeria's inflation that has eased. And based on reports, Nigeria's inflation rate declined slightly in August 2024 to 32.15% from the 33.40% recorded in July 2024, reflecting a decrease of 1.5 percentage points and offering some relief from persistent price pressures. However, year-on-year inflation remains high. Also, the anticipated Fed rate cut could have both negative and positive consequences for Nigeria. A weaker dollar might increase import costs, while lower U.S. interest rates could attract capital inflows. The overall impacts will depend on Nigeria's economic resilience and its ability to manage these competing forces. Uade Ahimie, Head Strategy and Public Affairs, joins me to talk about these two interesting areas. Thank you so much, Mr. Ahimie, for joining us.
Good afternoon, and it's a pleasure to be on the show.
Okay, so what specific economic factors would you say contributed to the decline in Nigeria's inflation rate, and how do these factors influence overall price levels? Because prices of commodities in the market are still high and unchanged.
So two things. Prices of commodities in the market are still high, but it's not rising as rapidly as they used to, and that can be can be attributed to a couple of factors. One is harvest season, so at the end of the day, more food is going in. I haven't seen the food inflation numbers, but I do think there is a slowdown in the rise of prices. Prices have remained a bit stable because there's more supply to the market, with the federal government also trying to, the federal and state governments also trying to put some of those commodities into the market. So at the end of the day, what you have is a bit of stability, and then going on, you'll find out that this is usually the season when crops are pushed into the market in preparation for the next planting season, which will come up towards the end of this month and sometime in October.
All right, Mr. Ahimie, I'd like you to just stay with us for a while. Hopefully, we'll be able to talk more about this. There's a breaking story, according to what we understand, a story filtering in now. Of course, our president, that is Bola Tinubu, has visited Borno State, and he has visited the IDP camp, and of course visited the governor, rather, of the state to commiserate with families and the victims of the flood crisis that has ravaged most especially Maiduguri in the state. And we have Umar Karawa, who is standing by to give us updates as regards this. Umar Karawa, good evening to you. I'd like you to talk to us about the president's visit to Borno State.
The president arrived in Maiduguri, the Borno State capital, at around 3:20 p.m. And the purpose of the visit is crystal clear, to sympathize with the victims of the flood disaster that affected them on 10 September 2024. And if you can hear the siren of the president, and we are heading to the Sheh's Palace shortly after the president's speech, very short speech to the victims of the flood at one of the displaced persons camp at Government College. He sympathized with the victims. He assured them that his administration will continue to support them and will provide all the necessary things that will help them recover. So right now we are heading to the show of Borno Palace, and if you can see very well, we are heading to the show of Borno Palace, and this is how the town looks like. If you can see very well, you see people standing on the streets, welcoming the president to the town, despite the incident that happened to them, which many of them believe it's something that God has destined it will happen no matter what. So we are heading to the show of Borno Palace, and any other thing that the president says, we'll keep tabs and we'll inform you in due course.
All right, thank you so much, Umar Karawa, for the updates. We'll continue to talk to you to get more details from that axis of the state who's now talking to you anyway. All right, so let's get back to the story around the Nigerian inflation. Nigeria's inflation set to be easing, according to details that we have. And of course, I still have Uade Ahimie, who is the head of strategy and public affairs, talking to us. Now, back to you, Uade. Now, what implication does this have for our monetary policy moving forward? Are you betting on rate cuts, or are you thinking it will hold?
I think rate cuts will not be the issue. I think it would hold. Why? Because it's just 2 months, so you need to be sure that this decline is steady. As you can see, the rate of decline on a month-on-month basis is not really very high. It was 2.36 in July. It was 2.22 in August. So at the end of the day, you just need to be careful. But like I said earlier, food prices are not changing as rapidly as it was earlier in the year, as a result of having enough supply to meet most of the demand in the market. So at the end of the day, I expect the CBN to maintain rates. I don't think they will cut it, and it will also depend on what happens globally and what the expectations are in terms of the global market. Also, you know what is happening in Europe and the potential of a 50 basis point drop in US interest rates.
Okay, so you've talked about what you are expecting in terms of what the NBC or the CBN rather should do when it comes to the rates. But then what specific fiscal, monetary or key structural policies could be introduced or probably adjusted by the government or by the CBN in this case to sustain or accelerate the decline in inflation rate? Some people feel that whether holding or increasing or cutting would not really do it for now, but then we need to be very categorical of what can work.
Well, I think, remember, when you started, you spoke about the pressures in terms of if the US Fed cut their rates and the impact on a weaker dollar, which could increase imports. So we need to try and stem the level of imports and see whether we can get additional investments into the system. With over 100 trillion in the economy, but we're not seeing it in production. These are the things I think the CBN needs to push. And at the end of the day, see how we can get either more loans at better rates through the financial services system as a whole, rather than through the CBN into the system, so that we ensure that, one, even if the Feds cut their rate, the push effect would help CBN reduce the MPR as we go on, so that cost of borrowing and cost of doing business will go down.
So would that add to the potential benefits that a few analysts have talked about, or should we be looking at the possible risks if the Fed rate cut happens for the Nigerian economy? Now, I'm looking at issues around capital inflows, exchange rate stability, and of course, inflation that we've been talking about. What do you think should be our looks?
I think we should be looking at the positives, and the positives. I remember, I think it was a few shows ago when I was in the studio with you guys, where I said, yeah, the rate cuts might not be very significant, but 50 basis points at this point in time is quite significant. And as you can see, one of the major issues and challenges of global markets is service inflation, and it's beginning to stabilize, and the belief is it would start to go down. Once it starts to go down, it means that the global supply chain will start to improve, meaning that providing services will become cheaper. And then those rate cuts, we might even see an additional rate cut as we go on, maybe up to another 50 to 100 basis points before the end of the year. So you now find capital outflow out of Europe and out of the US and Europe, and would start to come back into emerging markets like Nigeria. So the potentials there are which kind of monies are coming into Nigeria? Are they FPIs, which are short-term monies, and we've seen a lot of that in the last 6 months through the Treasury bill system, or are they FDIs which will go into specific areas of production that would bring back the levels of production we had and increase them, and start to see the economy get back on track and be stimulated with those capital inflow at the end of the day.
All right, thank you so much, Uade Ahimie, Head Strategy and Public Affairs. It was nice talking to you.